If you have a decent amount of retirement savings, but it's not saved in the proper buckets, you might find that yes, you have enough saved, but because you haven't been taking full advantage of some more tax efficient buckets due to all of your money being in pre-tax retirement accounts, you'll find that what might look like a decent amount of retirement savings, once you actually get into retirement, it's not going to be that much money. And you'll find that taxes will have a significant impact on how much ultimately you're going to be able to spend in retirement. So that's what we're going to be talking about today. If you run in a race, you need to know where the finish line is, right? That's part of in entering the race in the first place, right? You need to know what that goal is. This is about helping Black retirees set goals, set targets, so that we can be accountable and we can course correct when we see that we're veering off track. So what I'm going to do is I'm going to give you a rule of thumb today. I'm also going to show you the 4 income or 4 asset buckets which describe where you're going to be pulling your retirement income, and how where your money is invested impacts how much you pay in taxes.
All right. How much should you have saved at your current age? I have a chart here that is a rule of thumb chart that helps you see where you should be right now based on your current age. If you are a 60-year-old and you make $100,000 a year, you should have $1 million saved. Now, this does not tell you where the $1 million should be. Okay, right? It doesn't have to be all in liquid, like investable assets. It could be property, right? So this is not where the money should be. This is telling you how much assets you should have, either income producing, growing assets that can be used to support you in retirement. Okay, so again, on the screen here, you see that that number is a function of your age and your salary. Okay, so the older you are, the more you should have saved, which you already know that. Now we're going to talk about the 4 types of money. So this answers the question, where is that money? So we talked about on this slide how much you should have in retirement assets. On this slide, we're going to talk about where those assets usually are. Okay, so these are the 4 buckets. You want to call them retirement asset buckets. First bullet point is what is known as a taxable bucket or a taxable account. This is any and all money that you have saved for retirement that is outside of your retirement plan. This includes things like your brokerage account, real estate. If your real estate is not held inside of an IRA account, you have rental property that you've acquired over the years, apartment buildings, any assets that you have that require you to pay a tax bill, either in the current year or in future years, based on maybe money that you're earning from the property. Maybe you have stock that you purchased in several companies. That money may not be in a retirement account. It just might be in a Charles Schwab brokerage account, or E-Trade brokerage account, or Interactive brokerage account, and you've been basically managing that money on your own. But here's the deal. That money is in a taxable account, meaning that as you make money on that account, you will incur a tax liability. If it's stock, you're going to have a tax liability when you sell that stock. If it's rental property, you're going to have a tax liability when you sell that rental property, unless it is in a either tax-free account or tax-preferred account. Now, second type of account is known as a tax-free account. 2 examples are your Roth IRA account. Your Roth IRA is tax-free as long as you satisfy the 5-year look-back rule. All of the money, all of the growth in that account is tax-free. You can also use life insurance as a tax-free account. If you want to learn more about using life insurance as an investment, I would encourage you to check out one of my videos. I have a couple of videos on my YouTube channel where we talk about a properly structured life insurance policy as a retirement investment vehicle. Today's presentation is going to highlight the importance of tax planning of not only financial diversification. We know about financial diversification. We also want to have tax diversification as well, because that will ultimately impact how much of your retirement money you can actually live off of. So tax-free accounts, again, Roth IRA, life insurance are examples. Third account is what's called a tax-deferred account. This is your retirement money. This is your pre-tax retirement account. You are probably, if you're working right now, you're putting money into this 401k, 403b, TSP if you work for the federal government. All of the growth in that account is tax deferred, meaning you do not pay taxes on any of the growth in that account until you take it out. That is tax deferred, meaning the taxes will be paid at some point in the future. That's different than a taxable account, where the taxes are going to be paid in the year subsequent to the taxable event. Okay, so tax deferred account or a tax deferred account is what most of you have, and that's where most of you are going to be pulling the lion's share of your money out of the tax deferred bucket. Again, IRA, 401k, 403b, TSP are examples. And then what you have what's called a tax preferred account. That's your Social Security. The reason why it is tax preferred and not tax free is because it's not tax free. Social Security is only tax free if you make less than $34,000 a year in total income. When your income exceeds that threshold, your Social Security then becomes taxable. Okay, it's taxable at different percentages based depending on how far above that $34,000 number you are. You all know the more you make, more likely your Social Security is going to be taxed. So again, these are the 4 buckets or the 4 places where you're going to likely have your retirement money. So what we want to think about now we understand what we need to have saved, right? We just talked about that. I'll go back. We know what we need to have saved based on our age, which is a function of our age and our salary. We also know the 4 buckets, which basically are where we could have that retirement money. Again, taxable, tax-free, tax-deferred, or tax preferred. So this is where your retirement money is. Okay? Now, let's talk about tax planning and the impact or the importance of tax planning on your retirement income plan. The way you want to think about tax planning is a proactive process that you engage in today, wherein you're forecasting your income tax liability in the future and you're making the necessary adjustments today to minimize the impact of future income taxes on your future income. Tax planning is proactive. You're looking into the future. You're forecasting into the future. You're planning for something that is ultimately going to happen in the future, but you're doing that today. Many Black retirees, Black investors do not engage in proactive tax planning. We do tax preparation, right? You go to H&R Block, okay, or even if you go to an accountant, just because you have an accountant does not mean that you are engaging in tax planning. The accountant that does your income taxes and does what you tell them to do, or the tax preparer that you're using to do your income taxes, those people are engaging in reactive tax planning, meaning they're essentially responding to something that's already happened. They're already basically they're responding to what's already occurred in your income tax situation. They're not helping you plan for future income taxes. And this is again the difference between tax planning and tax preparation. Make sure you are engaging in proactive tax planning prior to retirement so that you can have more of your income, keep more of your income in retirement. Okay.
All right, family, that's all I got for you. If you're interested in scheduling a free consultation, you can visit blackwealthcompany.com You can also see our upcoming events at blackwealthcompany.com, or you can go to Eventbrite and see all upcoming in-person and virtual events. You can also follow me on Instagram and TikTok, the Jerry Gordon, and also Jerry Gordon on Facebook. This is Jerry Gordon, President and CEO of the Black Wealth Company, where Black Wealth is our business.